Muted. If you could please just type in the chat conversation or the Q&A section if you can see my screen and if you can hear me okay. I would appreciate some feedback on that. Okay, great. Looks like everybody can hear me, so we're going to go ahead and get started. We are here today to go over payroll frequently asked questions. This is a complimentary webinar from EQHR Solutions. I'm going to start with a disclaimer. So please note that this webinar is intended for informational purposes only. Also, our webinars frequently prompt questions from the viewing participants. Given our time restraints today, we don't have time to answer those questions during this presentation itself. However, we'll make an effort to answer those questions during subsequent webinars and through blog posts and individual emails. Please note that responses to individual questions and specific situations will require a client agreement. With that being said, I'd like to introduce myself. My name is Dana Edmond. I am a senior payroll and HR advisor for EQHR Solutions. I have over 15 years of experience in payroll and human resources. What I like to bring to my clients is delivering solutions on system training, support in areas of payroll, time and attendance, leave of absences, benefits, and retirement plans. I've worked in the public, private, and voluntary sector, also known as nonprofit. I have extensive experience with working with ADP, Ultimate, PrimePay, Paychecks, QuickBooks, and other payroll software providers. I've also executed a variety of payroll software implementations for both small and large employers. So let's go over the agenda. We're going to go over 4 main topics today. We're going to look at a review of California's pay stub requirements. We'll be looking at what is California's regular rate of pay, a review of best payroll practices, and what are California's final paycheck rules. So we'll dive into the first subject, which is a review of California's pay stub requirements. We're going to look at 2 main items, which are what are the mandatory items for pay stubs in California and how to avoid common mistakes. I want to show you an example of a pay stub, and I'm going to go through each of these. Again, as a reminder, I'm facilitating, so don't mind me looking back and forth here. I want to point out a few things to you. So the 10 items that are required from the state of California for pay stubs, we'll start with gross earnings. As you can see that here on the pay stub. Next is going to be total hours worked by the employee, which is here. The number of piece rate units earned, if applicable. So again, that doesn't apply to all employers, but if it did, it would be in the hours and earnings section. All deductions made from wages. So you'll notice here there's taxes, which are statutory mandatory deductions, and then deductions here below are for voluntary, such as health and 401k. The next item on the list is net wages earned, which you'll see is notated here on this pay stub. The next item is pay period beginning and end dates. You'll see that here on the top right under the earnings statement, there's the begin date, the end date, and then the pay date itself. Next, you're going to see the employee's name and last 4 digits of their social security number. So here's the employee's name and the last 4 of their social security number. Now, please keep in mind for the social security number, you can actually use an employee's identification number as well if you're not comfortable using the last 4 of their social security number. As long as you can tie the employee ID number to your payroll or HRIS system, it's okay to use that as well. The next thing is going to be the employer's legal name and address. And so that's notated here on the top left of this paycheck step. The next one is all applicable hourly rates in effect during the pay period. And so you can see under hours and earnings, they're listed here, each individual rate for the different descriptions of earnings. And the last one is going to be how many sick days or hours are left as a balance for the employee. So at the bottom left, you'll see a sick balance. So as we just went over, these are the 10 items that are required by the state of California. There's a lot of common mistakes that happen, but some of the more frequent ones are that employers don't list the total hours worked. So they may list each individual line item of hours, but they forget to total the hours as well. So it's important to include that. The other is the start and end dates of the pay period. Some employers forget to include both and just include the start date or the end date. The next is the employer's legal name and address. So I say that because it should be the actual legal name of the company, not an alias, as well as their business address. Also, keeping a copy of the pay stub for your records as well as the employees. That way they're able to access their pay stubs if they need them. The next is leaving out an area on the pay stub for double time and any premiums that an employee was paid for, such as missed meal periods. And another common mistake is listing the following items in a confusing way, such as overtime compensation, commissions, and bonuses. Make sure on your pay stubs that it's very clear what you're paying to the employee. That way, anybody who's pulling that pay stub can take a look at it and understand what's being paid. So I'd like to make a suggestion for all of you out there using different online payroll software systems. A lot of times there's a need for a manual check. It could be there was an error with the payroll, it could be a final check that's needed. And so a lot of times you're using a calculation part of the payroll system in order to produce this manual check. A lot of times your payroll system will not actually produce a compliant pay stub. So it's important that you're providing for any manual checks a compliant pay stub with those 10 items that we discussed. And so for those of my clients who have software companies that don't actually provide a compliant pay stub, I created a quick and simple Excel spreadsheet that can be used. You would just fill in the blanks here and you'll still be compliant. It's going to be copying over all the applicable data for a manual check, such as a final check. So just keep in mind that when you're producing those manual checks through your online payroll system, such as ADP, that you're checking that paycheck stub to see if it's compliant. And if it's not, use a tool like this to produce an actual compliance statement. Let's do a quick pop quiz. As I mentioned, there is the Q&A or chat section that you can type in your answer. What's missing on this pay stub? I'm going to give you about 15 seconds to take a quick review and try to figure out what pieces or piece of information is missing from this pay stub. Give you just a few more seconds. Seeing some answers come in here. All right. So yes, that's correct. The sick leave balance is missing. That should be on the pay stub here, and it's not. Something that other people didn't mention. Let me check the chat again. Nope, nobody mentioned this one. So the total hours, as I mentioned, a lot of times employers have this as a common mistake. So yes, there is a total hours that should be applicable on a paycheck stub. All right, so let's move on. Next subject we're going to dive into is the California regular rate of pay. It's a little bit of a tongue twister for me, so I like to abbreviate it and call the RROP. So we're going to do a refresher on what the RROP is and how to calculate it. So let's first start. The regular rate of pay is a basis for overtime compensation under the FLSA and California. So what is overtime pay, or how is it calculated? Overtime is paid at 1.5 times the regular rate of pay. So then we ask, well, what is the regular rate of pay? It's the hourly rate. It's unique to each of the work weeks. And the formula to find the regular rate of pay would be all compensation for all work performed divided by the hours worked. So when is the regular rate of pay? When does it come into play? When an employee is paid multiple forms of pay, such as different hourly rates or different types of work, or hourly pay plus an hourly shift differential for some hours. In these situations, the regular rate is calculated using the weighted average of 2 rates. When an employee is paid commission or a non-discretionary bonus, these amounts must be included in the total compensation paid when calculating that regular rate of pay. I'm going to go through an example here. So in this example, you have an employee who's worked 30 hours at $15 an hour and an additional additional 12 hours at $16 an hour. You might be wondering, why are they being paid 2 different rates? It's only $1 apart. In this instance, it's an employee who's working a night shift, and so they're giving $1 an hour for a night shift differential. So the overtime is calculated as follows. The first step would be calculating the total earnings. The total earnings would be the 30 hours at $15 an hour plus 12 hours at $16 an hour, which is going to give you a total of $642. Then you're going to divide that total earnings by the total hours. So you have 642 hours divided by 42 hours gives you $15.29. To calculate the additional overtime premium that's due, you're going to take that $15.29 and multiply it by half for the premium, which gives you, there's a little bit of rounding here, but it gives you 7.645. Then you're going to calculate the additional overtime pay by using that 7.645 and multiplying it by the 2 hours of overtime, which gives you a total of $15.29. Now you might be asking, well, where did the two hours of overtime come from? So as a reminder, the employee worked 30 hours and 12 hours. That gives you a total of 40 hours. So those 2 hours over the 40 hours give you that those 2 hours of overtime. So that was a lot of words. I wanted to make it a little bit more clear for those of you who are visual learners. So I went ahead and put it into Excel here for you to take a quick look. We'll do one more recap. So $15 an hour times the 30 hours gives you $450. $16 an hour times the 12 hours gives you $192. You add those two earnings together and you get a total of $642. From there, you're going to take that total earnings of $642 and you're going to divide that by the 42 hours, which again is the 30 hours worked and the 12 hours worked. It's going to give you a regular rate of pay of $15.29. Again, there's a little bit of rounding here due to it being an Excel spreadsheet. From there, you're going to take that $15.29 and multiply it by half, and that's going to give you 7.64. Now you'll take those 2 hours of overtime, multiply it by the overtime premium, and you're going to get a total of $15.29 for overtime pay for this employee. This one's a little bit more complicated. We're going to just do a surface level review of this. This is an example where an employee works 50 hours at $10 an hour and also receives a commission of $100. So you're going to calculate the total earnings, which is the 50 hours times $10 per hour. This gives you $500 plus a $100 commission. It's going to give you a total of $600. You're going to divide the total earnings by hours, by the total hours. So that's 600 divided by 50 gives you $12 for the hourly regular rate of pay. Then the overtime rate based on the regular rate of pay is the $12 times 1.5 gives you 18. Then you're going to calculate the overtime by using the regular rate of pay. So that's the $18 times 10 hours gives you 180. So the total gross earnings is going to be 680. Here we're going to move on to a review of best payroll practices. So we're going to dive into 4 of the most important ones, which is checks and balances, a benefit of routine audits, why documentation is important, and the importance of backups or cross-training. So again, let's dive into each of these. Let's start with checks and balances. So in the public sector, audits are mandatory. Without proper checks and balances, passing an audit would be nearly impossible. So you need to have your paper trail and checks and balances in place. It's important that you have at least 2 people working on payroll, one for input and one for review. As a quick example, and this is going to sound a little bit dramatic, but you'd be surprised at the stories I can tell you with what I've seen. If you have an administrator who's accessing payroll and they not only are entering changes, but then also reviewing the changes, and there's no checks and balances in place, you're actually putting your company at quite a big liability, even a risk of embezzlement. Let's look at the next one, which is benefits of routine audits. So routine audits are beneficial as they can find errors that could be more easily resolved in a short-term basis. So imagine over-deducting somebody for months before even catching the error because you're not doing a routine audit. Or better yet, overpaying an employee for almost 6 months and then having to go back, calculate the overpayment, and rectify it. This is why a benefit is to have routine audits with each payroll. Next item we're going to look at is why is documentation so important? Well, documenting what, why, and how you pay an employee is important for auditing purposes, compliance, and if you receive subpoenas. If you don't have backup documentation, somebody on the outside could never come in and understand what you paid to an employee and why. So keeping a paper trail is always extremely important for your company. Next item is backups and cross-training. So we're living through a pandemic. This is a great example that anything can happen. So it's best to be prepared and have all your bases covered in case your primary payroll person isn't able to perform their job. Let's be honest, people get sick, they resign, shoot, they might hit the lotto and never come back to work. You don't know. So with that being said, having your staff cross-trained is crucial so that there's at least one backup to this essential function of your business. There's also some other best practices for payroll. I've listed them here. It's a little bit of a lengthy list, so I'm just going to go into them pretty briefly. Classifying your employees correctly is also very important. Are they truly a W-2 employee, or are they a 1099 contractor? Are they exempt or are they non-exempt? And so utilizing things such as the ABC tool is essential for your business to be classifying your employees correctly. Next item is keeping tracks of dates and deadlines. And so you want to make sure that um, your excuse me, that your deadlines and dates are all marked on your calendar, that you're working with other departments to make sure that your dates are in line with theirs. For instance, if you have somebody who in payroll is processing the payroll, but they're not processing the tax liability payments, obviously the person processing those tax liability payments should be understanding what the payroll deadlines are for those tax liability payments. And so it's crucial to make sure that they're following all the proper deadlines and keeping you in compliant with all these liability payments. The next item is going to be creating payroll policies. And so I skipped over, my apologies. Creating payroll policies. So it's really important that you're making a policy and procedure that's in place for payroll. And the reason for that is if you need to actually explain to somebody why something's being paid, how it's being paid, creating these is one of the most effective methods of solidifying your payroll best practices, and also makes it easier for that person to follow why you paid them the way that you did. The next item we're going to look at is having organized payroll records. So organizing your payroll system based on how many employees you have, as well as how many additional documents you keep for your personnel files is really important. Choosing a good storage system will also go a long way in keeping your records organized for the long term. The next item we're going to look at is protecting your online data. And so there's no such thing as having too many security measures in place to protect your digital assets, especially for assets as sensitive as your employees' payroll records. So choosing a method such as a cloud-based security option to put your employees' sensitive data first and decentralizing how you store your data is also really important to make sure that you're not being compromised in any way. Next one we're going to look at is determining which payroll laws affect your business. So California is ever changing with their employment law. So it's really important you stay on top of these laws to keep your employees paid accurately. A great example of this is local municipalities. So some of them can be exempt from daily overtime, whereas employers who aren't local government, obviously they have to abide by the daily and weekly overtime rules. So making sure you're staying abreast of these rules and regulations is extremely important. The next item is saving payroll documents. So the IRS lets your business know that the most payroll records need to be kept for at least 3 years, but there are other sensitive documents that need to be retained longer. So making sure that you're staying abreast of these guidelines is important to keep your payroll records compliant. I'm going to move on to California final paycheck rules. So we're going to look at 3 different types. So you have voluntary resignations, involuntary terminations, and then potential penalties. So let's look at those 3. So let's start at the first one, which is voluntary resignation. Let's look at that with notice. So if you have a voluntary resignation, the employee has put in their 2 weeks notice, you know when their last day is going to be, you're going to want to make sure that your paycheck, their final paycheck, is prepared and readily available for them on their last day. And that should include accrued vacation or PTO. So an employee who quits on the spot, what are you needing to do to have them paid in a proper and compliant way? So you want to make sure that you're paying them within 72 hours of their quitting on the spot. And so that should also include their accrued vacation. Making sure that if you have to mail the check out, let's be honest, if somebody quits on the spot, you're not going to be able to hand them their paycheck, and they may not want to come back to your business to pick it up. So an employee who quits on the spot without giving 72 hours prior notice, their paycheck can be mailed to them, and the date of mailing will be considered the date of payment. So please keep that in mind. Now, if an employee is involuntary separated, such as a layoff, their final paycheck is due to them immediately upon that layoff, and it should also include their accrued vacation and PTO. So let's look at some, actually one of the common misconceptions about direct deposit for a final pay. So can an employee's final check be directly deposited? And in short, the answer is no, but let me explain. So not unless the employee voluntarily authorizes to receive final payment via direct deposit. So as a best practice, receive written authorization to directly deposit those funds with an employee when they resign. For involuntary terminated employees, always provide a live check. So you might be asking, well, what if we are not compliant with paying an employee for their final check? What would we be facing for fees and penalties? So an employer who willfully, fails to pay any wages due to a terminated employee, whether they discharge or quit, within that time frame may be faced with a waiting time penalty. So what is that waiting time penalty? Well, the waiting time penalty is an amount equal to the employee's daily rate of pay for each day with the wages that remain unpaid, up to a maximum of 30 days. I'm just going to give you an example to kind of make you understand how big these could be. Let's say you have an employee, they make $50 an hour. They work 8 hours a day. That's $400 a day in gross earnings. Now, the maximum amount for the penalty is 30 calendar days. So we look at that, we multiply $400 per day times those 30 days, you're looking at $12,000. That's huge. That is a huge amount of money as a liability to your company. So it's important that you're following these guidelines to get people paid timely and accurately when they are involuntarily or voluntarily terminated. Please note that an employee will not be awarded any waiting time penalties if he or she avoids or refuses that final payment. So in conclusion, I want to go over those 4 subjects that we started with. So it's important to keep your employees' paycheck stubs compliant with all the required items through the state of California. Those are the 10 that we mentioned earlier. And then you want to make sure that if an employee works at 2 hourly rates within the same pay period, that you're using the regular rate of pay to calculate the overtime premium. Also, you want to continue to have checks and balances within your payroll team. Conduct routine audits, save documentation, and have your staff cross-trained so there's backup to this essential function of your business. And lastly, when preparing a final check, be sure to stay within the guidelines of when, how, and to pay the employee. So with all that being said, I want to thank